So good morning everybody and welcome to today's pre-US open market update. It's currently 60 minutes before the open of the US stock markets on Wednesday the 22nd of May. So we've got the FOMC minutes being released this afternoon, 2 p.m. Eastern Standard Time. So I would expect potentially some volatility around there. It very much depends on whether there's any surprises in the voting and what the committee members had to say at the last meeting. And then we've got Nvidia's earnings after the bell tonight, which are widely anticipated. Now, Nvidia does have a history of beating estimates on earnings, but what I will do partway through this afternoon's US session is do a specific analysis of Nvidia, which we will record. I'll do it live in the room, and we'll look at the relative rotation graphs, the cycles, and so on and so forth, and some support and resistance levels in Nvidia. In the meantime, I just wanted to zoom out slightly and look at the daily chart of the ES Mini as a reminder of where we are. And going back to the low we saw in October of 2022, we've got an ABC for a 1 to here, a 2 back, an ABC for a 3 into a 1.0 extension. So very standard textbook stuff thus far for a diagonal. WXY back for a 4. All that fits perfectly. Then this. Now, this is getting very, very extended. No problem with that, in that the wave 3 was fractionally longer than the wave 1. So wave 3 cannot be the shortest, no matter how much the wave 5 extends. But all of this, I think, is a large 5-wave structure for an A wave of an A, B, C in a large ending diagonal off the March 2020 low. With the 1, 2 and 3 and then the 4 being that pullback into the October 2022 low. The only other way I can see this is an A, B, C for a 1 to here. This was a 2. This is an A, B, and we are heading up in the C of 3. And then we get a 4 back. Now what that would mean, we would still be in for a relatively high degree pullback, but it would be just against this leg up off last October's low, as opposed to the B wave against all of this leg, one or the other. On a more immediate basis, the question is this: has this move that we're seeing up, is it done? It needs to be an ABC structure. And as you can see, when you zoom out to the daily chart, it could well be that we've got an A, B, extended C, and we're going to complete all of this at the highs we're seeing now. Then we start the journey down. The alternative being, as I'm showing it in the ES, 1, 2, 3, 4, 5, and this is the A wave of this 5th. We then get a pullback against the rise off this the low we saw in mid-April this year before a final push up. Then we get the bigger pullback, one or the other. So there's a lot of ifs and buts in there. But if you just stand back for a moment, we are close to a pullback, either from the highs we've already seen in this particular fractal, or possibly one more push up. And it's then a case of watching the retrace fibs against the move off this pivot low here, which is the low we saw in mid-April. We would have to take that out to open the door to more. And if we do take that out, then it would suggest we are going to get a retrace at least against this leg and quite possibly against all of this fractal here. So we're closer to a larger degree move to the downside than and in terms of risk and reward compared to what we've got left on the upside from here, I would suggest. Now, overnight, we've made a fractionally higher high. We'd started to push up late yesterday, but we're coming off again. The key levels in the ES below the market right now, 53.07, which is the little spike low we saw the other day, then the low that we saw pre-market on the CPI data release at 52.18 the other week, and then below there 51.87. So those are the three levels that we need to take out in order to confirm we're at least in a deeper retrace against this leg here, and we would need to take out that April low in order to suggest that the larger degree move is done and we're going to get a bigger move down. The bigger move down doesn't really fit with what we're looking for potentially from the cycles, unless it is a wave 4, ergo only a retrace against the move up off the October 2023 low as opposed to the 22 low. We're expecting a cycle trough in the first week of July. Now that doesn't mean lower low or anything else. It simply means that we will get a bottom, and after that the cycles are suggesting that we're going to get another multi-month move to the upside in markets. So given that we are now heading towards the end of May, we've got around 6 weeks of downside ahead of us once we've got a confirmed top in place in the US markets. In the NQ, I'm showing it ever so slightly differently in the NQ, in that I'm suggesting that potentially this is the A, B, C for all of this fifth here in this fifth wave. If that's the case, then I'm looking for the bigger pullback once this move, this fractal off the April low completes. So that's just a different interpretation, if you will, shown in the NQ here of one of the interpretations that are likely that I've just been through in the ES. In the meantime, if we bring the NQ down to its hourly chart, again, it made a fractionally higher high overnight. We've come off, but key levels. 18,682.5, that's the first level. A much more important level to take out, 18,546. And I'm going to leave it at that with the NQ. Until and unless we can take those out, then we have absolutely no confirmation that we are not going to continue to subdivide higher at least once more in the NQ either. Okay, let's then come over and look at the European markets this morning. Now, the UK FTSE started coming off early this morning prior to the open here. We've had a pullback and down, potentially ABC 1, 2, ABC 3, 4, ABC 5. If we now start to see from probably just a touch lower, a pullback, and it respects a retrace fib against this move down, then that would set up a 1-2 to the downside and a potential swing short opportunity in the UK FTSE. So if you wanted to look at that, be cautious. The FTSE can be a very tricky index, as you know, and wait for a signal coming off the retrace fib. And we do need to be aware with diagonals, this could be ABC1 here to ABC3, and we get a shallower pullback, then a fifth. So we would get a larger diagonal, but if we see that, the retrace, providing it respects a retracement fib, then gives us one of our buy signals to provide the tight stop at entry, would then present a reasonable swing short opportunity in the UK FTSE. In the German DAX, again, it's still not managed to take out these lows. It needs to get below 18,626. If we can do that, potentially we've got a series of 1-2s to the downside here in the German DAX, and we can start to see a larger degree, wave 3, unfold of the larger one that we would be looking for off the top. But at the moment, it's just range bound until unless we can take that low out. NG I'm going to do next, and NG coming off further, which is what we were looking for. So off the low from the other week, I've got an ABC 1, 2, ABC 3. I'm looking for this 4 back here, and then another ABC structure up. All of that to complete a larger degree A wave in the very large ABC correction that we're looking for against the most recent swing down. So after a move up to around the 309 area, I would look for a pullback in a B wave before the next fractal to the upside to complete the larger degree correction in NG. Now, CL. So CL, we had that, bear in mind, these are the continuous contracts that I chart in order to be able to give you the daily, weekly, and so on timeframes over the sort of periods we need to look at. That does cause some issues on the smaller time frame trading charts when we get contract rolls. So the front month for CL rolled overnight, and what you'll see therefore on the continuous contract is the gap down. But what I'm tracking is this 1, 2, and potentially, as I went through in the weekend update, the 2 is in, and we've got another little 1, 2 to the upside forming, and it would form a 1, 2, 3, 4, 5 for a 1 of this wave 3 up. Overall, I'm looking for a large C wave up to at least 104.96, possibly as high as 114.72 in CL, and I think we're in the early stages of that, but we do need higher to confirm that the wave 2 is indeed in. Now, if we come down to the hourly chart here, what we have is, and unfortunately it's going to be a leading diagonal for the wave one. It's not forming an impulse. So if the 2 is in, ABC 1 to here, ABC 2 back, providing we remain above the low that we saw at the end of last week, and we can get back above 80.06 in CL without taking that low out, then that would be enough confirmation that the low is in, and we should be subdividing higher from here in CL. In GC, excuse me, started to come down nicely yesterday. What we now need to see is the break back below 208.50, and I'm just looking for the rest of this wave 4 back to the HVL, which is the 0 gamma level overall on the hourly chart. That's at around 23.65, after which we should then see another A, B, C structure up to conclude the larger degree wave 3. And again, just to give you perspective on that, if I take you to the daily chart, this is what we're looking for overall in GC, is for a 4-5 for this 3 up to 24.95. Then we should get a pullback that would hold above 18.23.50 before a final ABC structure up to at least 28.52, and I suspect it will extend into the low 3000s in GC to conclude a much larger degree move to the upside. Okay, let's then take a quick look at the currencies next. So the US dollar starting to move up nicely now, and I'm looking for continuation of that move up to the 107.73 before we then pull back. Cycle low expected around the second week of July, and I think that's likely there for the wave 2. But for now, we're starting to head up off the wave 4 low in the diagonal. In the euro, therefore, we're coming off its wave 4. I'm looking for an ABC structure down for the 5 over the 1 towards 105.13 before we then get a 2 back in the euro. In the US dollar Japanese yen pair, I mean, this is playing rather awkward. I have a suspicion that what we've got here is this A wave was actually in here and we're in the B wave. I'm still looking for a C of 4 down to at least 148.33, perhaps a little lower. The must hold level 137.23, after which we should then see a move up in the 5th wave to at least the 1618 fib at 169.72 and possibly more in the US dollar Japanese yen pair. In cable, we've got the spike and reversal into that wave 2 high that we've been looking for on the lower time frame charts. In fact, if we just go down to the 2-hour chart, you can see that we hit the fib literally, let me just pull this across to the penny here. We came up to the 786 retrace fib for the C of 2, and I'm now looking for another move down towards the 123.6 fib next at 120.38, providing this morning's high remains intact. First level of cable next needs to get back below 126 overall. And in the Australian dollar, so the Australian dollar is playing awkward here, and it needs to hold around the current levels in order to continue as an impulse structure to the upside. But I'm looking for another series of 3-4-5s up to the 69.37 area to complete the larger degree wave 1. Okay, cryptocurrencies. Now, having broken out nicely, they're taking a little bit of time here to get going with the next leg. What I think we've got in Bitcoin off the wave 4 is a 1, 2, 1, 2, 1, 2, 3, 4. We now need to see the 5 of 3 of 3, then a series of 4 5s up to around the 85.75 to 88.837 area. That would conclude all of the larger degree wave 3 off the low that we saw last year in Bitcoin. And so I just put that again in perspective, I'm looking for a move up here to this 84.679 area on the larger degree daily chart before we get a 4 and then a final 5th up to conclude a much larger degree wave 1. And in Ethereum, similar thing here. Ethereum, though, I think is part of a wave 1 of the next 5 wave structure up. Ultimate target 57.10, but we do need a 4-5 of this one before we get the 2 back in Ethereum, then the 3-4-5 to conclude the move after that. Okay, that's what we have first thing this morning. What I would suggest is that after the opening period and the settlement period's out of the way, we are likely to see low volume, tight range bound trading again into the FOMC minutes. Quite what happens when we get those remains to be seen, and then I would expect once that dies down, we're going to have low volumes again until after hours when we get the Nvidia earnings release. Okay, that's what we got. Let's see what we do get when we open.